Markets extend losses with key indices now at the day's low. Nifty slips below the 200 DMA and Sensex sheds almost 700 points. IT stocks fall the most while metals buck the trend. Broader markets underperform. Accenture delivers a strong performance and ups its guidance, with Gen AI also gaining traction, but analysts remain concerned about the continuing weakness in IT. Deals that may continue to weigh down on Indian IT players. Exide gains after its EV battery arm strikes a supply deal with Hyundai, while Amara Raja also energy perks as Korean auto major becomes the first auto company to introduce the Made in India AGM technology batteries. The GST Council meet tomorrow is set to decide on very crucial proposals like introducing a new 35% rate, exempting life and health insurance, adopting graded taxation of goods based on price points, and bringing ATF under GST. CNBC-TV18 learns that Flipkart is looking to shift its domicile from Singapore to India for regulatory ease and better governance. The move will also likely pave way for an IPO in the next 12 to 18 months. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at the market, right? A volatile day was what we saw coming in. As of now, Nifty is trading at the day's lowest point, 23,762, down 0.8%. In the last few minutes, if you look at it, we've seen that sharper fall coming in for the markets. Let's pull up what Nifty Bank is also doing in trade as of now. Is that also near the day's lowest point? We'll watch out for that. But Nifty Bank, yes, that's right. Day's lowest point coming in for the Nifty Bank at the day's low. 0.8% of decline, 500 points or 450 points almost down for the Nifty Bank in trade. Let's pull up the broader markets because they have been underperforming today, the benchmark indices since the get-go, and now broader markets also have seen further more selling coming in. Broader markets, so Nifty mid-cap down 1.4% in trade, small cap also is seeing that much of a decline in trade as well. So no respite coming in on the broader market front as well. Small cap down almost 1%. Let me just pull up in terms of the contributors that are leading to this decline today as of now for the Nifty, with those IT names that are falling in trade today. So Nifty IT among the top losers that are coming in, and look at the names. We have TCS, Infosys topping the charts in terms of contribution. Other than that, L&T also, which is among top drags, and Axis Bank, which is leading to a bit of a fall coming in for the markets, and furthermore fall in terms of contribution drag coming in for the Nifty 50. But on that note, that's how the market is looking right now. Nothing exciting. Day's lowest point is what it's trading at this afternoon. Moving on to the 55th GST Council meet that is set to take place tomorrow. Now, a whole host of deliberations and discussions are likely to be taking place at this meeting. My colleague Timsi Jaipuria has been tracking what could come in on this agenda of this meeting. She's joining in with us to fill us in on what is the latest coming in from her sources. Timsi?
Well, that's right. The upcoming GST Council meeting, which is slated to meet on 21st of December in Jaisalmer, has a packed agenda. Firstly, top on the list could be Rate Rationalization's Group of Ministers report, which is likely to be tabled in the council meeting only. Till now, it is not on the agenda, but yes, it is likely to be tabled during the council meeting. If proposed, this group of ministers can propose a special rate of 35% on tobacco and tobacco products, aerated beverages, ready-made garments, luxury wristwatches, etc. could get expensive, and many common use items could see a rate cut. Apart from that, group of ministers on health insurance and life insurance premium are likely to submit its report. Group of ministers is likely to propose exemption on individual term life insurances and on health insurance for senior citizens, and for non-senior citizens for a cover up to 5 lakh rupees per annum is likely to be exempted. Apart from that, Council could discuss the possibility of bringing ATF under the GST regime. Also, Council could discuss on the taxation of e-commerce food delivery apps, where delivery charges are currently charged at 18%, but now they are likely to propose a 5% without ITC, that too retrospectively from 1st of Jan 2022. Also on the agenda is payment aggregators issue that the charges that payment aggregators get, 18% GST should be levied on transactions below 2,000 rupees that are done via card payments. So that could be a bump for people. Apart from that, many items are there on the council's agenda. Clarity for namkeen sector, clarity for all your real estate players and much more. Let's see what all gets cleared. Back to you.
Thanks so much for that, Timsy. But let's move on to the latest update that came in this afternoon. Now, the Oil Ministry is seeking a higher compensation for the under-recoveries on the sale of domestic LPG in the budget session. So, Darshan is joining in with us to give us some more details on this one and what it means for OMCs as well. So, Darshan, good afternoon.
Good afternoon, Vinay. So now Oil Ministry is seeking compensation on LPG under recoveries, and now that amount is likely to exceed rupees 25,000 crore, which was till few months ago around 17,500 crore. Now talking about all these oil marketing companies, which company is likely to be the biggest beneficiary? As of H1 FY25, total LPG under recoveries were of rupees 17,500 crore, of which IOC forms more than 50%. For IOC, LPG under recoveries in H1 FY25 were rupees 8,870 crore of total rupees 17,500 crore, followed by HPCL, for which LPG under recoveries was rupees 4,500 crore, and after that BPCL, which had under recoveries of rupees 4,120 crore. So all these companies will be impacted positively if Finance Ministry goes ahead with Oil Ministry's recommendations and approves LPG under recoveries that Ministry is seeking for, which is likely to be more than rupees 25,000 crore.
Okay, Sudarshan, thank you so much for the latest update coming in on that front. On that note, let's move on. And Bajaj Auto, that has unveiled their latest new generation of Chetak electric scooter in Pune earlier today. There are two models in the series. There's 3,501 and 3,502. Ex-showroom price starts at 1,20,000 rupees. Now, the electric scooter comes with a range of interaction via touch sensitivity, inbuilt document storage and music player, along with calling and texting options. Okay, on that note, we're going to slip into a very short break. But up next, both houses of parliament were adjourned Sunday amid the protests over Amit Shah's remark on B.R. Ambedkar. We get you more on this after this break. Thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on. And a setback for IL&FS-backed Noida toll booth company, which manages the flyover that connects Delhi and Noida. The Supreme Court has upheld the Allahabad Court ruling, stripping the company of its right to collect the toll on the flyover. We have Ashmit, who's joining in with us with more details on this one. Good afternoon, Ashmit.
Well, indeed, a big setback coming in for Noida Toll Bridge Company. The stock, in fact, locked in lower circuit as we speak. The reason for that essentially has been the Apex Court upholding in Allahabad High Court order, Allahabad High Court judgment rather, of 2016, thereby stripping the company of its authority to levy toll on vehicles that are passing on that road. Now, this company essentially was collecting toll on the D&D flyway, which connects Noida to Delhi. It's about a 9.5-kilometer stretch of road, which is critical for movement of traffic between Delhi and Noida. They had been charging toll till 2016, till Allahabad High Court had stopped them. They had challenged that before the Apex Court. There was litigation for the last 8 years, and finally the Apex Court having a final word and unequivocally stating that there is no case made out by the company for going ahead and for charging toll any further. So therefore no tolls need to be paid by vehicles plying on that road. The rationale that the Apex Court has given is that, number one, as far as the award of contract itself is concerned, the Supreme Court said that questioned Noida rather as to why no competitive bidding process was done in terms of arriving at the final candidate. There was also questions raised about the authority exercised by Noida in terms of allowing this company to go ahead and to charge toll. And number three, there were questions raised about the formulation and the computation of the total project cost. The Supreme Court opined that given the language that has been used as a part of this lease agreement, it essentially allows the company to go ahead and to seek recovery of its project costs till infinity. In fact, the Allahabad High Court had said that even 100 years later, we could find this company charging toll on the road for recovery of project costs. So on all of these grounds, the Supreme Court saying no case is made out and therefore no toll to be levied on that arterial road between Delhi and Noida, the D&D flyway. Back to you.
Okay, Ashmit, thank you so much for the latest update on that front. But let's move on. Walmart-owned Flipkart's board has approved the firm's change of domicile from Singapore to India. The move to reverse flip comes at a time when Flipkart is readying itself for an IPO, tentatively in the next 12 to 18 months. Let's go across to Rachna, who's joining in with us to tell us what her sources are saying on this matter. Rachna, good afternoon.
India's e-commerce behemoth Flipkart is making a strategic shift to go public. CNBC-TV18 has exclusively learned from sources that the company's board has now approved relocating its domicile from Singapore to India, a crucial move to facilitate its much-anticipated IPO expected within the next 12 to 18 months, which means it could get launched by the end of FY25 or early Q1 FY26. The decision is not just about location, it's about strategy. By shifting to India, Flipkart avoids stringent FEMA and FDI regulations that foreign-controlled companies face here. This relocation will simplify compliance, streamline governance, and ease tax complexities, paving the way for a smoother IPO process. If all the needed approvals come through, this IPO could be the largest one yet. In 2024, we saw Hyundai emerge as the largest that valued the company at about $19 billion. But with Flipkart's IPO going ahead, it could be historic, as Flipkart was last valued at about $36 billion this year. Backed by Walmart, which owns an 85% stake after investing $3.5 billion in the company, Flipkart recently raised close to $1 billion in 2024 from investors like Google and other marquee names. Yet, it hasn't been all smooth sailing. In FY24, Flipkart reported a loss of about 2,358 crore rupees on revenues of 17,907 crore. We reached out to Flipkart seeking a comment on board's approval on change of domicile, but the company, without denying, has refused to comment at the moment. But we will definitely be watching out for more.
Okay, thank you so much for that, Rachna. And you can just see the flashes at the bottom of your screen. Some private capex in semiconductors has not picked up pace, is what Siemens is saying. Stock is down 7%. They're saying overall it has not picked up meaningfully, but let's keep an eye out on that. On that note, we're going to slip into a very short break. We'll get you the look back at the year that was for RBI and its regulatory crackdowns after this break, so stay tuned in. Welcome back to Business Lunch on CNBC-TV18. Now, 2024 has been a year of heightened regulatory scrutiny for India's financial sector. From fintech heavyweights to traditional banks and microfinance institutions, the RBI took action against a series of lenders and financial entities. Signaling a firm stance on regulatory compliance, CNBC-TV18's Ritu Singh has a highlight of what has been the year of big regulatory crackdown.
2024 was a year of reckoning for the financial sector. The Reserve Bank of India took unprecedented action against various financial entities, signaling a shift towards stricter compliance and consumer safety, and driving home the message that abiding with regulations is non-negotiable. The ball was set rolling early in the year with action against Paytm Payments Bank. The RBI barred the bank from onboarding new customers or accepting any deposits, effectively shutting down the payment bank's business. It based this action on repeated non-compliance by the bank with KYC norms and governance deficiencies. But it wasn't Paytm Payment Bank's first brush with the RBI. However, this time, the central bank had run out of patience.
Such restrictions which we impose are always proportionate to the gravity of the situation.
In March, two firms, IIFL Finance and JM Financial, faced business restrictions. IIFL, a key player in gold loans, was restricted from issuing new loans because of violations in gold valuation and loan-to-value ratios. For JM Financial, The offence was governance lapses in financing IPOs and bond subscriptions. In April, Kotak Mahindra Bank was ordered to halt onboarding new customers through its online channels and suspend new credit card issuance because of weak IT systems. And the crackdown extended to microfinance as well as new age lenders. In October, RBI barred 4 non-banks, DMI Finance, Ashirvad Microfinance, Navi Finserv and Arohan Financial Services from sanctioning and dispersing new loans, citing excessive pricing practices and non-compliance with regulatory guidelines.
We found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%. Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society.
Restrictions on one of the NBFCs, Navi Finserv, were lifted in a little over a month, on IIFL Finance in 6 months, while those on JM Financial Products were in place for 7 months. The others, however, are yet to free themselves of regulatory embargoes. So why this sweeping regulatory action?
The Reserve Bank has taken up this as one of its focus areas to create awareness as well as to ensure adherence to good corporate governance practices.
The RBI's tough stance has been met with praise and criticism. Some quarters allege it is being overly punitive, especially towards fintechs. For instance, soon after the action against Paytm Payment Bank, a dozen startups penned a letter to the government arguing that such measures could stifle innovation and hurt the broader fintech ecosystem. RBI says the numbers don't support this argument.
Out of over 150 banks, over 9,000 non-banking financial companies, about 1,500 UCBs, and various other entities that we supervise, stringent actions have been taken only in a handful of cases.
RBI believes these actions will serve a dual purpose. One, it's a signal that the cost of non-compliance will be too high to ignore. And two, it promises consumers greater transparency and protection. For financial entities, this is a wake-up call they cannot afford to ignore. What is becoming increasingly evident is that this is a new, stricter, no-nonsense RBI that expects and demands compliance with its rules and regulations. And while it is willing to give financial entities time to get their house in order, its patience is not endless. In Bengaluru, Ritu Singh.
Okay, and with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18, leaving with the Nifty at a downtick of around 1% as of now, 23,750 levels. It's a goodbye from myself as well as the team who put the show together. Midcap Radar up next.